Welcome to the Daily Insights That Matter. The India-UAE Comprehensive Economic Partnership Agreement entered into force on the 1st of May. This was the first FTA that India had signed with any economy in a decade. Now, after a hiatus of many years, India is back to pursuing free trade agreements. Let's look at how the FTAs have helped India yet. Now, between May and October this fiscal year, since the FTA came into effect, exports to the UAE hit $15.36 billion, which is a rise of around 19% from the year ago numbers. Meanwhile, goods imports from the UAE also jumped by 32.8% to $27.44 billion in the same period. Now, do know that the UAE and India trade saw a significant rise in FY 2022 due to a lower base effect from 2021 on the back of the COVID-19 related restrictions. Now, one of the industries that has benefited the most from the trade agreement is the gems and jewelry sector. Encouragingly, this fiscal year, shipments from the gems and jewelry industry to the UAE increased by 20.6%, greatly outpacing the 2.6% growth seen in the overall dispatches of these goods from a year ago period. Now, the trade agreements, including FTAs, can be extremely beneficial if done right. India's past experience with trade agreements has not been very positive. The deals have more often than not benefited the other side more. That is, there has been a surge in the imports with a minimal impact on the exports. Now, from the data we've discussed, while exports have increased, we see that the imports have also seen a significant rise. Officials believe that it is still too early to judge, and it will take a medium to long-term review to fully determine any gains or losses from the FTA. And we tend to agree with that. However, we do believe that the early indicators are promising and that we anticipate a favorable outcome going forward. Sebi has approved amendment to its buyback regulations and has decided to gradually phase out share buyback through the stock exchange route by April 2025. Until then, a separate window will be created on the stock exchange to conduct such repurchases. Now, a share buyback is a type of financial transaction in which any organization uses cash to buy back its previously issued shares from the market. When a business buys back its own stock, it lowers the total number of outstanding shares. Repurchased shares are either cancelled or kept in the company's treasury because the corporation cannot be its own shareholder. Now, at present, for share buyback, companies have both the options of stock exchange and tender offer. Minimum utilization of funds for buyback through stock exchange has also been increased to 75% from 50% currently. Additionally, it has also approved measures to boost governance at stock exchanges and other market infrastructure institutions. Now, the stock exchange route for buyback is vulnerable to favoritism, as except a few, no one knows when the company buyback is really going to happen. The tender route will be more equitable. Until the current process is completely phased out by 2025, buybacks will be undertaken through a separate window on the stock exchanges. Sebi will also permit the upward revision of the buyback price until 1 working day before the record date. Sebi has also indicated reducing the overall timeline of such processes. Following the glide path, the period for completion of the buyback offer will be reduced from the present day 6 months to 66 working days from 1st April 2023, and this will be further brought down to 22 working days from 1st April 2024. Shareholder protection is sharply in focus in India after a spate of frauds surrounding the NSE and MCX and flop IPOs, which have eroded returns for minority shareholders. So what does all of this news mean for you? It is too early to assess the benefits from India's FTA with UK. So this will have an indirect neutral impact on you for time being. Now, Sebi's move to phase out buybacks via the stock exchange route is part of its efforts to tighten the regulation and to improve corporate governance amid a rise in frauds and underperforming IPOs which have hurt the minority shareholders. This will therefore have an indirect positive impact on you. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.